Good afternoon, everybody. I'm Bob Bertsch with North Dakota State University, and I want to welcome you to this Cooperative Extension Twitter chat as we talk about year-end financial planning tips. It should be a great conversation, and we hope that you can join the conversation by using the hashtag EXChat on Twitter. Send us your questions and your comments about year-end financial planning tips as we talk with our panel of experts, and they include Dr. Barb O'Neill of Rutgers University.
Hello.
Dr. Erik Tobe from Michigan State University.
Good afternoon, everyone.
Ricki McWilliams of the University of Florida.
Good afternoon.
Andrew Zumwalt from the University of Missouri.
Afternoon.
And Erik Anderson, who'll be monitoring our social chat. He's with the University of Idaho.
Hi, Bob. I'm glad to be here today.
Yeah, it's great to have everyone here to talk about a pretty important subject with the end of the year obviously coming up. A lot of financial and tax implications that might have to do with that, as well as holiday spending and all kinds of fun stuff to talk about today. So let's start with that question, why this end of the year is so important in terms of financial planning. Barb, why do we need to pay attention to financial planning at this time of the year?
Well, I'm sure Andrew's going to talk more about taxes, so I'll leave that part to him. But there's just a lot of things that come in at the end of the year. You're setting yourself up maybe for payroll deductions that'll take place next year. So many people will have been through an open enrollment process, either through their employer or through the marketplace health plans or through Medicare if they're older. So just getting yourself set up for the following year, maybe your payroll deductions that you're going to be taking for a retirement savings plan so that you have those take effect next year. And also just to benchmark your progress, just to see how you're doing. If you've set some goals for the year, you want to see if you achieve them, or if you didn't, what you can do to kind of catch up.
Ricki, are there other things to keep in mind, or certain things maybe that Barb covered that you think should, have some extra stress put on them?
Well, certainly at the end of the year, you've got a lot of people coming over to the house. You may have family gatherings or a lot of friends come over. Those piles of paperwork that you've been meaning to get around to all year long get stashed away in the corner. Those pieces of paperwork, whether they're charitable deductions or paperwork from your work, a lot of things are online now, so hopefully you have a way of keeping them organized electronically. But if you do have paper copies of different receipts and things like that, you need to make sure that you're putting them in a safe place, because as it gets towards the end of the year, you're going to need those items come January, February, whether you use a professional to complete your taxes or whether you're using any online preparation tools to do them yourself.
This seems to be a time, for me anyway, when I'm scrambling to spend flexible savings account money and scrambling to, get charitable deductions at the end of the year. Does that seem to be the case, Erica, with most people? And how do we kind of manage that if this is a hectic time of the year anyway?
Yeah, I think it's really a nice opportunity to really sit back and reflect as far as how things have gone. And you're right, it definitely is a hectic time. There's a lot of family gatherings, a lot of different things that we're trying to wrap up. But it also provides an opportunity to really take a step back and see where you've gone and where you want to go for the next year. A lot of times we don't stop and think about that and stop and reassess what's happening. And I think this becomes a prime time where you can actually start to set your goals, think about what your goals are, and really think about how you can frame those goals for the future. If it is relationship to your tax planning and things you want to think about, if there are different things that you need to pay down as a part of that, but then also think about how you're going to identify what you want to set aside for the next year, and think about how you're going to strategize so that maybe you're more prepared, or maybe there's things that you can do to help yourself down the road. And setting some goals is one of those things that can help do that.
Andrew, from a tax perspective, what do you think the key things people should be focusing on this time of year?
Well, I think one of the key things to think about is once the year closes, that's pretty much it. You don't get a chance to go back and change a lot of things. Making a traditional deductible IRA contribution is one of the rare exceptions, but just like you mentioned earlier about the flexible spending accounts, making sure to have those child care expenses or the health care expenses, have those and be done with them, so that when you reconcile with your FSA, it's easy to get that money out. Because once, there's some exceptions to the rule, but once the year ends, the year is ended for tax purposes.
Well, Andrew, let's stick with you and talk a little bit about income tax planning actions for the end of the year. You mentioned flexible spending accounts. What are some of those actions that people should be looking at as the year comes to an end?
Actually, I think one of the best actions someone can take is to kind of step back and think about organizing your tax situation. So we're going to be getting a lot of mail at the end of the year. Either have a physical place to put your mail or have a virtual place where you can save your files. So when tax time rolls around, mid-January, end of January, maybe a little bit later, if you get brokerage statements that come out in February or March, you've got all your stuff collected in one place, so you're not scrambling at the end of or the middle of April trying to get your stuff together. So there is a lot of changes you can make. You can make your charitable contributions, but with some of those actions, you've got to step back and really say, there's a tax reason for these actions, but is there a real reason? Am I being impulsive in my decisions because it's the end of the year and it's the tax year, oh my goodness, or is there a real reason behind it? So we get a lot of mail about charitable contributions. Step back and say, is this really something I want to donate to, or is this not really in my plan or my goals?
I'm curious, Erik, since we bring up this idea of charitable giving, this might be a little bit off topic for us, but do you have suggestions about how people might go about making sure that their donations, especially at this time of year when everybody seems to be asking, making sure that it's going to a place that is fits with your values and is going to spend the money wisely?
Yeah, I mean, well, one of the things I think you need to think about is and I really think at the beginning of the year is really one of the times that you want to think about that as far as where do you want your money to go and who are the different places that you do want to provide donations to. One of the things that you do as far as tax planning is you need to make sure you have those receipts, that you're keeping all that documentation, because you will need to be able to keep that for your tax records. And so making sure that those are organized is really, really important. But really, I think it's almost a two-front approach, because you also have to think about where you're going to be putting your money, how much money you want to give as far as charitable donations, and what are some of those choices and what are the values that you have, because truly it does go back to your values as far as what you do value and where you want your money to go as a result of that. One of the other things I was thinking about when Andrew was talking, though, is you also have to identify if there's any major changes that happen throughout the year. So if you had a child, or if you got married, or if you purchased a house, if there's been any major changes in your financial situation that may influence how you do your taxes, and what are some of the tax deductions that you could possibly take, or what are some of the the choices that you have to make on the tax form itself.
Barbara, there's certain things or tips that you have for, since we're talking about taxes, how, figuring out how you're going to approach your taxes. Maybe you've done it the same way always, whether that's online or through a certain company. Do you have tips for maybe choosing a tax professional, or how you should go about that if you're maybe, especially if you're taking value or taking stock of your financial planning, and maybe want to make sure that how you do your taxes aligns with that?
Well, two things that I think about at year end is, first of all, you got to figure out whether you're going to itemize or not, because all those charitable deductions that Andrew was talking about and Erica, they really are only going to do you any tax benefit if you're able to itemize. So one thing you might want to do in the next 3 weeks or so is to just see if you are going to be able to be over the standard deduction, so that itemization can take place, and then that can inform your decisions about how much you might spend on charitable contributions. There's this whole concept of bunching deductions, where you're very close to that limit. You try to either go forward to the next year and bunch then, or try to get them all in 2015 and bunch them for this year. So that's a planning thing that people can do in the next few weeks. And then another thing that is something to plan for next year is just looking at your withholding. And I'm not a big fan of people having refunds anymore, because big refunds anyway, because you know, there's so much identity theft, and you could be held up from getting your own money for months. I've heard of cases where it's even go on longer than that, you know, while they verify your identity. So you can still be a victim, but if you aren't getting a refund or you're getting a small refund, at least you're not going to be out your own money. So that's something people might want to look at too. I mean, ideally, people probably will do that more maybe March or April when they've actually calculated their taxes. But you can do it now and just have it take effect for the entire year, 2016.
I wanted to say real quick, sometimes it's not even identity theft. It might be the state that holds on to your tax refund for a little while, and
Right.
then maybe at the statutory limit, oh, it sends you the refund, so they don't have to pay you any interest. So it may not just be identity theft. It might be the state that holds on to your money for a little bit.
Yep, we've had that in my state.
Erik, how's the online conversation going? I want to remind folks that as you're watching live, you know, you can jump onto Twitter and take part in the conversation using the hashtag EXChat. What's the Twitter feed look like so far, Erik?
We're getting a little bit of conversation going, and that's really good. We've had some really good comments about these first two questions, and here's a good suggestion from USA.gov regarding income tax planning actions, and they suggest start a filing system. So sort of plan ahead for the next year. It's good to get your house in order for the coming year. And there other suggestions which have been discussed: making charitable contributions, maxing out specific tax savings types accounts, the IRA and the health savings account have also been suggested. So Meredith Berry suggested maxing out the IRA contributions at this time of year. Make sure you're and into the next year before tax time. So good comments.
Great, thanks, Erik. Hey, everybody, keep those coming on Twitter using the hashtag EXChat. Ricki, let's talk about some of the other financial planning actions people might be thinking about at the end of the year. What are some of the other things outside of taxes that people should be looking at?
Well, I think everybody hopefully survived Brown Wednesday and Black Friday and Small Business Saturday and Cyber Monday and all those fun things that we just went through. But I think a lot of times at the end of the year we see those big sales and we wind up making purchases on big items. So maybe we do expect to get a tax refund back and we go ahead and spend that money before we get it. So either we're buying big purchases, but we need to make sure that we're actually doing our due diligence to research that and make sure that we're looking around to 3 or 4 different competitors and we're getting the best price. And we're actually comparing the product itself to one another to make sure that we're getting the exact same thing. So sometimes if you look at the fine print, something may be cheaper, but you're not getting the exact same thing. As well as to make those purchases in 2016, setting up a spending plan for 2016, so maybe you've got the money in 2016 to make those big purchases that you don't necessarily maybe have the money or want to make this year. So I know for me, I had a child a couple months ago, and so this Christmas, gift giving has come to a halt. But I've made that very clear to friends and family, and we're just going to spend time with one another this year. So I'm trying to alter my spending plan a little bit to match some life occurrences that have happened.
Barb, Erik mentioned that on Twitter, Meredith talked about IRA contributions, and is this a good time to look at investment performance and retirement plans?
Yeah, investment performance for sure. But let me just clear up something about the IRAs. As Andrew mentioned before, that's one of the few areas where you actually can carry over to the tax filing deadline, which is either April 15th or whatever date it is. I don't know if it falls on a weekend or not. I haven't checked that out yet. But you could do your IRA contributions or your simplified employee pension, SEP IRA, up until the tax filing deadline. So there's not as much of an immediacy for that decision as there would be for other investments. The thing that you need to do before December 31st is if you want to buy or sell investments, it's a good idea to kind of see where you stand. And back in the day, you might not really have known your investment value because you would have had to wait for a statement. But of course, these days you can just go online, check out your account, see how your investments are performing, and then depending on your financial goals, your financial needs, and how your investments have performed. So you got a lot of ifs there. You may decide to sell some securities, possibly at a gain or a loss, and then people get into this whole thing of offsetting the gains with the losses, and maybe carrying forward some losses if they want to. So those are the kinds of decisions that people would need to be making in the next few weeks as the year winds down.
Something else with the investments would be to, we talk a little about the traditional IRAs and making contributions. There are some contributions you can make that really don't affect your federal taxes but can make a big difference. So if you're contributing to a 529 plan, a lot of times there's annual limits for that, and so you want to make sure you put those contributions in before December 31st. And also, if you're looking to gift monies to different people, there's an annual limit of $14,000 without having to file a gift tax return, and you can give $14,000 to whoever you want. So lots of options there that aren't related to income tax necessarily, but are related to this calendar year limit.
And I would say still one other thing to think about with those college savings plans is that sometimes there's also state tax deductions that you can take, so there's an added advantage in tax planning as well for that. And so really making sure that you can take advantage of those tax deductions if they exist in your particular state.
I would imagine, Andrew, that if other states are like North Dakota, that there's all kinds of different potential state deductions that you could look at, from whether that might be energy efficiency or whatever happens to be in your state. Is it important for people to be aware of those and be looking at those at this time of year?
Absolutely. With Missouri, we actually have a very interesting situation. We can put money in any 529 plan in the nation and take the deduction on our tax returns. But several states, I think Illinois is one of them, they actually have a limit and says you have to put money in Illinois' 529 in order to get that contribution deduction. So make sure if you're doing that 529, you know where it's going and whether your state approves of a contribution in that plan for a tax deduction.
And what's a 529? Can you explain that real quickly, just for our listeners who might not be aware of that?
Sure. A 529 allows you to save for college expenses. You can use it for tuition fees, books, supplies, equipment, and most especially room and board. There's not many tax benefits to room and board. You're not able to use any of the tax credits or the tuition and fees deduction, but using that 529 plan that you've saved up over your child's lifetime to spend on room and board is a great idea.
Barb, one thing we haven't talked about these other financial planning actions is health insurance, and this is the time of year. Maybe it was last month, maybe it's this month that you might be getting notifications from your employer or to look at the health insurance plan if you want to make changes, or you might be shopping for yourself. What are some of the things people should be doing to make those choices and plan for that?
Well, I think one thing that you want to look at for the remainder of this year is if you have certain caps on your plan or deductibles that you have to meet or balances that you have to spend down. That's where you sometimes have to just get very creative and get in touch with your doctor or your dentist and schedule work either this year or next year, depending on whatever is going to be best for your situation. So that's kind of important. And then, of course, the decisions that people would have made in the open enrollment periods that have just past. In some cases, most of the employer plan enrollment periods are probably in October. At least they are. If state employees here in New Jersey, the plan that I'm familiar with, you're going to have to live with those decisions come next year. So whatever you chose for your deductible, for example, and the different copays and everything that's associated with your chosen plan, those are all going to take effect next year. And there were articles that were reported about the fact that some of the healthcare plans on the Affordable Care Act exchanges, those prices were going to be going up. So people will have to obviously manage their cash flow accordingly if that's the case.
I'm going to throw a... Oh, go ahead, Ricki.
Just to follow up on what Barb had said, managing your cash flow, living with the choices that you made in October, early November for those open enrollment periods, you may not be able to make changes now, but if you see yourself needing to make changes, you can make note of that and make sure you make the necessary adjustments next October during that open enrollment period again. So this is a time where you can actually start making those goals and setting those boundaries for yourself.
I'm going to be a little self-serving here and just see if and not point at any of you because I don't want to put any of you on the spot. But if someone wants to volunteer, I'd be happy to hear from you. One of the things I struggle with, in terms of these flexible spending accounts, child care costs might be pretty consistent, but when you're trying to come up with an amount to put in that the medical or healthcare side of things, are there calculators, strategies, anything that you could use to predict the unpredictable in terms of how much your healthcare costs are going to be in the next year?
I think the best thing that you can do, Bob, is just do an annual tracking, which you probably could time in with your tax benefits anyway. For example, in the state of New Jersey, where I live, we can claim a medical deduction if our total medical costs, including our premium cost sharing, is 2% of our adjusted gross income, whereas with the federal limit, it's 10% now, and I guess 7.5% if you're over 65. Is that correct, Andrew?
That is right.
Okay, great. So I save those receipts just because I can get the state tax deduction. I can't get the federal, but I save everything. I just throw it in an envelope. The copay, the receipts that I get from the doctor, the bills that I get from the pharmacy. I have all my prescriptions mailed and to me and everything. All those receipts go into an envelope, and then at the end of the year, I obviously add those all up and see how much I can deduct. But as I'm saying that that whole process can also be used not only to add up your deductions, but to inform your decisions on your healthcare savings account. So I think probably the best way, because none of us has a crystal ball, we can't predict if somebody's going to have an illness or a kid's going to have an accident on their bike or anything like that. The best we can do is look at our history and just making a point to save every receipt that could possibly be tax deductible either on the state and federal level. That'll give you a good idea of what your costs would likely be. And then if you want to add, just for being a little conservative, adding maybe 10% to that amount just in case, you could do something like that as well.
Thanks, Barb. Andrew, you have something to add to that?
More work for you, Bob.
Thank you.
I see most of us belong to the eyeglass club, so that's easily, maybe $100 for the exam, maybe a little bit less, and for the frames and for the glasses. So, yeah, I agree with Barb. It's a matter of, what are the predictable expenses, and then maybe adding a little bit. Or, you make a good argument for an HSA where there isn't this, oh my God, I've got to spend the money. The money rolls over every year. You've got to have a high deductible plan to go with it, but that's kind of one of those benefits of the HSA versus FSA.
Great, thank you. Erik, where are we on the Twitter conversation? I'm injecting my own personal questions here, so people on Twitter might be doing so as well, using the EX chat.
Actually, we just received a question in the Twitter sphere, and it's from Sarah Carter, and she asked, For those who aren't familiar with the term, how would you define year-end financial planning?
Who wants to take that? I'm going to pick on Erica. Erica,
yeah, okay, go ahead, Erica.
I'm just chuckling because Sarah's from Michigan. So, I would really say, year-end financial planning is really thinking about kind of getting your ducks in a row, really thinking about what your financial situation is like, becoming organized with a lot of the financial paperwork. We're talking about tax planning because that's one of the logical things that happens at the end of the year is we're trying to organize all of our financial paperwork. But I think it's really larger than that. I think it has a goal-setting aspect. I think it's thinking about the future. So it's really reevaluating where you've been for the year and then thinking about how you're going to maybe make changes for the future, what are some of the goals that you have, and really reevaluate what you're doing as well. But a lot of that comes in when you're starting to think about your taxes, you're starting to think about some of the changes that were made and how you're going to institute those changes for the future. So I think it's more of a collective term in a way of really thinking about how you're going to reorganize and organize your financial life that you have. I'd welcome other thoughts, though.
Barb, I interrupted you. I think you're about to say something.
No, I agree with Erica. I think it's the whole constellation of activities that you're doing probably in the last quarter of the year. I think that's where it starts to take on an urgency because you've got the open enrollment and you've got, December 31st kind of standing you in the face is the ultimate deadline for things that you can do related to taxes for the most part. So it's all of those things. It's the healthcare planning that you're doing. It's investment decisions, retirement plan contributions. Even if you're fortunate enough to get a holiday bonus, what you might be doing with that money. Another thing that I would recommend to people is thinking about the savings challenges. So I made a New Year's resolution last year to do the 52-week challenge, which actually has a link on Ricki's website down in Florida. And it's interesting, I didn't really have a goal for it other than to do the challenge. So doing the challenge was the goal, not buying something or doing something. And so now it's like week 49 and I'm, closing in on that goal. And so next year I created a $2,500 challenge. I figured I'll just kind of kick it up a notch and see. So that's another thing people could be kind of doing this time of year is thinking ahead for their New Year's resolutions and what they want to do and try to make something really tangible. I really like these savings challenges because they are tangible. They tell you exactly how much to save each week. And of course, you have to figure out how to do it, but it gives you the structure, which is helpful.
Thanks, Barb and Erica. Ricki, for those people who don't moderate panel discussions of financial experts every once in a while, like I do, where can people get help with their year-end financial planning?
I think the first place that most people are going to have access to and the easiest place to reach are extension offices throughout the U.S. So in each given state, there should be a local extension office that anybody can contact or try to get information from, and that's where I would start. So it kind of depends. If they need assistance with their taxes, maybe United Way is very active in their area. AARP is very active in other areas as far as tax assistance goes. So it depends on the location, but an extension agent would definitely be able to point them in the right direction. So a lot of people maybe already have financial advisors or financial counselors that they use, which that's fine as well, depending on your financial situation. It's just going to depend on the individual and the location.
We see a lot on the media this time of year, Erica. I would assume, just like everything we see in the media, there might be some good stuff and some bad stuff. What do you think about that, and how do we sort that out?
Yeah, it's funny. I just had this conversation with my personal finance class the other day about this, actually. But, yeah, there's a lot of opinions out there, and there's a lot of quote-unquote experts that are giving financial advice. And I think one of the things that you have to do is you have to distill that knowledge and make sure that as you're reading it, you're understanding and really evaluating it for its credibility. There's definitely a lot of information out there. Obviously, anything that's going to have a .gov or a .org, we hope is going to be as reputable as possible. Some of the governmental websites can be really nice sources of information to help process things as far as like the Federal Trade Commission, their Consumer Financial Protection Bureau. People can go to eextension.org, and that's associated with Extension as well. But there's a lot of great financial information there. There's also a feature called Ask an Expert, and so if you have a particular question and you want to get information back fairly quickly, that's another resource that you can go to. But so I think some of the challenges is really taking information and really collecting as much information as you can, but making sure that you're collecting credible information from a good source. Some of it out there, unfortunately, is opinion based, and so you have to really look at that and make sure that you're looking at it for what it's worth.
Barb, do you have other suggestions about places people can go to get help at this time of year?
Well, the Twitter chats are actually quite useful, and there's a number of them that are regularly scheduled, and we do them periodically through cooperative extension, such as the one we're doing today. But there are some regularly scheduled ones that go on every week, cash chat and credit chat and WB chat, and they can be quite helpful. Personal finance magazines are helpful, and if you don't want to get a subscription, I get a lot of information just from Twitter, not necessarily the chats, but just the Twitter streams. If you're following some of the leading research institutes in personal finance, I think of like the Center for Retirement Research, if you're interested in retirement planning, Kiplinger's magazine, Wall Street Journal, all of your leading personal finance media outlets are on Twitter, and you don't have to subscribe to their publications. You'll still see a lot. Many of them have blogs as well. So if you're really into Twitter, as probably everyone is today, or you wouldn't be on our Twitter chat, just following some of those reputable resources, and of course cooperative extension is one as well, and getting information, because very often they'll have links to research studies, and you'll be able to see the primary sources of information and use that information with your own decisions.
Yeah, and I want to remind you that if you are a Twitter user and you happen to be watching the Hangout here on the YouTube archive, so you might not be watching us live right now, go ahead and use that EXChat hashtag, or you can also reach the eExtension Financial Security for All community practice from the Twitter handle @MoneyExtension. So Money Extension. Barb O'Neill is Money Talk 1. All kinds of great information. I bet if you drop Barb's name into a tweet, she will respond to you. Even though she's busy, I'm sure she'll get back to you. So those are some great suggestions. Erik, anything else showing up in the Twitter feed that might add to that conversation?
Just echoed a lot of what's already been discussed, several call-outs for the cooperative extension system, both locally and nationally, as was mentioned. There's just a variety of resources there. And Kathy Swedler mentioned that there are financial professionals, other financial professionals who can help as well. And there is a lot of information available through the extension system to help you find a qualified financial professional. And she included a link in her tweet to a University of Illinois extension resource on helping you find qualified financial professionals. So lots of excellent verification of the work being done nationally in cooperative extension.
And I did just want to encourage anybody out there that's listening that it is okay to interview your financial counselor or financial planner. So you don't necessarily have to look through a paper or look through a magazine or see a billboard and then have an appointment with that one particular person or agency and feel like you're stuck with them. So it's definitely they're working for you, and to get that interview process and to make sure that the two of you are a good match for one another is highly encouraged.
Great. Andrew, what's coming down the pike in 2016 in terms of personal finance laws and how we might be affected by those?
There's actually a few things. One, just to kind of go back to what Barb was talking about earlier, tax day when your taxes are due is actually April 18th. It's been pushed a little bit based on some holidays in Washington, D.C. So it's April 18th is tax day. We've still got 50 expired tax laws for 2015, and they'll probably be extended in 2015 at the end of the year, probably with last-minute type of effort. But then they'll probably expire again, so we should look for them to come back in 2016. We might get a 2-year extension, which would be fabulous, so we don't have to have another crazy 2016 end-of-the-year brouhaha. Something else to consider is the FAFSA changes. And so FAFSA will now look back 2 years, so 2015 will now be a reference for 2 years. So if you're looking to plan for, to kind of plan for what your FAFSA is going to look like when your children go to school, make sure you understand when the 2016 year will actually be used as a reference year, because it'll be 2 years out from there. So that's a definite change. Of course, all the levels will be adjusted for inflation, so the standard deduction, the exemption, all those will be going up, but just a very small amount, not very much. And of course, Social Security for 2016 isn't changing, actually. And so not much has changed. It's just a few minor things.
Barb, do you set financial New Year's resolutions? You talked about the savings plan, that the savings challenge. So obviously you do, but what do you think of those, and what's your suggestion for people to, if they should pursue those or not?
Well, yeah, I think if you are going to follow through on it, and I think it has to be realistic. I think sometimes people tend to set goals that are just really beyond what can be reasonably done, either with their eating habits or their spending habits, because it tends to kind of focus in on food and money. They tend to be the top of the list every year when they do those surveys of what people are making resolutions about. So if you keep it realistic and you have a structure to it, I think that's good. I think and a goal, and the goal could just be the savings, like just doing the challenge, but it often is more motivational if you have a certain end game in mind. So if it's a trip you want to take, or a new iPad, or whatever it happens to be, it's always easier to save for something than just to save. So I would encourage people to do that. Just figure out what the cost of the item is that you want to get, and then kind of back end into it and figure out how much you need to save, either per paycheck or per week, to have that money when you need it.
Ricki, how does the 52-week money challenge sort of help people do that, and are there certain things that make people more successful when pursuing a challenge like that, other than the ones that Barb mentioned?
I think that, well, I'll tell on myself here. The 52-week money challenge, I got lost right around week 39, 40, so I did okay for the majority of this year. And then my little bundle of joy kind of got me off track. So my goal, again, in 2016 will actually be to complete the challenge. Like Barb said, sometimes having an end goal in mind, so not just to do the challenge, but you're going to get to take a trip, or you're going to get that electronic device that you really wanted, or you're going to get a brand new comfortable couch, or a pretty TV to watch your favorite football game on. So sometimes just having that in mind helps people continue those savings challenges. But again, if you see yourself get stuck, or maybe you miss a week, don't necessarily get down on yourself. Try to get back the next week and kind of get yourself back in check. But to make them realistic is definitely the key. So even if you can't do the 52-week challenge, or you look and you go, oh wow, week 40 I'm not going to be able to save $40 a week, or week 50 I'm not going to be able to save $50 a week, start with the 12-week challenge. So start small and think big, and go from there. Just make sure that you do something that's realistic, and like even if you didn't do something that you made a resolution in 2015, and somewhere along 2015 it didn't quite work out for you. So it's kind of like the age-old saying, if at first you don't succeed, try again. Just make sure you keep on setting those goals and reaching for them.
Erik, we might be a little bit ahead of the Twitter feed or behind the Twitter feed. I don't know where we are with the Twitter feed, but has anybody shared any of their financial New Year's resolutions on the Twitter feed?
Yes, and we're actually about parallel right now. We've kind of gone back and forth. There were a couple comments I will share that were not overly favorable of the resolution approach. Pam Atkinson at Wallet Warrior said, no resolutions, they break and can be forgotten. She suggests setting financial goals instead, which can be a little bit more forgiving, and this mirrors some of what has already been said. And then Meredith Berry chimed in and said, too many resolutions include weasel words, so they're just a little bit perhaps loose. USA.gov had great advice, and again, this echoes some of what has been said. To use a resolution or a goal at the beginning of the year to help you tackle a larger money or larger financial goal, such as saving for a house or paying off credit card debt. So lots of good advice. Now there was some very specific advice from Pam Atkinson also about always do your financial work with a purring cat on your lap, and that helps keep you calm. And several people commented that they liked that approach and would try that in the future.
Thanks, Erik. I think that that's interesting because we all laughed at that, but this is obviously a subject that causes people stress. So, are there some ways that including purring cats, Erica, that we might be able to handle thinking about this? Talking about this maybe with our family or our spouse, and trying to, make it not a stressful conversation.
Yeah, it's funny. One of the things that I was thinking about is a lot of times I think it's all about expectation and what we set our expectations on. And I think so many times when we do New Year's resolutions, there's so many expectations that this year is going to be different, and we have this. It's a new opportunity. It's a new year to really to start out, and so our expectations are really high. And so I think there's actually a day that actually most, in general, when those resolutions actually end, and it's like the middle of January, and it's because the expectations are really too high. And so I think it's really developing. We a lot of times financial education people say SMART goals. Make sure they're realistic. Make sure that they have a time element. Make sure they're achievable. That you can actually accomplish it. And I think that's so true. But as far as how to make it not stressful, I think some of the things you can do is just have these regular money talks, communicate about money regularly. Sometimes the stress comes in when we don't plan these things, and we wait until that last minute where there's a stressful situation that's occurred. Either we have a bill we can't pay, or we have an unexpected expense that we have to figure out what to do. So a lot of it, I think, is planning ahead. And it doesn't have to be huge changes. It doesn't have to be big things. It can be very small steps that you make, and a lot of times it's those short-term goals, those small steps that you do that actually you can see success, and then maybe you can build that in the future. So I guess kind of the long and short of it, try to lower those expectations a little bit. Make sure that you really set those achievable goals and communicate, talk with your family, and make sure that everyone's on board, so that it helps to really achieve whatever you're trying to do.
Andrew, if financial conversations make us uncomfortable or a little bit stressed, some of us, then taxes are like the monster under the bed, I think. So I'm sure you dealing with people with tax questions and things like that have some experience in that. What can people do to make it not so scary? I mean, just culturally, whether it's stressful doing your taxes or not, everybody tells you it is, so it must be, right? So are there some things that you can do to get more comfortable with just this whole process of dealing with your taxes?
People come into our VITA sites all the time, and what they've done is they bring in their paperwork, their mail from the IRS, and it's unopened. They saw the letter from the IRS, and they didn't open it because they were worried about what was in there. That's a bad idea. You want to open that mail, respond to any questions they have. The IRS is pretty nice to work with if you stay in communication, but if you just start taking that mail and putting it in a drawer and not thinking about it, then problems are only going to magnify, and it's just going to be worse later on. So don't procrastinate with the IRS. Be proactive with them. and be considering your tax situation throughout the year as well. You know, if you know you're going to owe, maybe start putting some money away. Don't procrastinate. Don't try and shove that bad news off.
Thanks, Andrew. That's great advice. I want to remind our viewers here on the Hangout on Air that we might be picking up some questions that aren't being discussed on Twitter, and so feel free to discuss those on Twitter with the hashtag EXChat. I almost messed that up. And get involved in the conversation, and feel free to introduce some of these new subjects as well. Let's go back to the financial goals, Barb, and talk about some suggestions for realistic financial goals. I know we've talked about some already, about the 52-week money challenge and some others. Are there other suggestions that you have for some realistic financial goals people can actually achieve next year?
Well, I was working on some slides this morning for the webinar that we're doing on February 16th on saving, and there's a segment in the webinar that's going to be talking about savings research, and I was looking at the latest retirement confidence survey that came out in April. Every year in April it comes out, and they survey people, and they find out how confident or not confident they are about their retirement. Anyway, there was something that really stuck out to me. It said that in the 2015 sample, 69%, so 7 in 10 basically, of their respondents, and they had a nationwide sample of, I think, 1,009 respondents. 69% said that they could save $25 more. That they could do it, either their first 25, or if they were already saving, they could do another 25. So maybe that's a good place to start. You know, $25 a week. Now, obviously, you have to figure out where that money's going to come from, and it might come from just looking at your spending, possibly. You know, spending in different ways, perhaps. We always hear about the latte factor. I don't really want to pick on the Starbucks coffee. I think if you want to have your Starbucks coffee, fine, but save first. Just get your savings done first, and then if you still want to have your latte or whatever else your daily spending vice is, not that it's a vice necessarily, but you know what I mean, it's things that add up that are kind of small on a daily basis. Figure it out. Just figure out how you could come up with $25. Another possible strategy is $1 a day plus your pocket change. And if you do that, you'll have like $30 from the $1 a day, and then maybe another, I don't know, $20 of pocket change. So you're looking at maybe $50 a month, and that's going to add up, you know, $600 in the course of a year. So those little kinds of strategies can really go a long way.
Ricki, do you have other things to add to that?
Well, and I know this is kind of funny. The pocket change comes into play. A lot of people may or may not use paper money anymore. So I've encouraged my family, and we have a few days a week where the whole family gets together and we take afternoon walks or an evening walk depending on when we get home, and we make a game out of looking for money and looking for change on the street. So the last couple weeks I've found 2 $1 bills and a handful of pocket change. So it's just a game that we like to play to lower the stress level of trying to save that money. And we do make sure that we have that automatic withdrawal and the automatic savings coming out of our direct deposits to make sure that we are saving the amount that we really need to.
If you're using electronic, I know my bank does, maybe lots of banks do, might offer some kind of round-up kind of feature where you know, it rounds up to the nearest dollar and that extra money goes into a savings account. Any thoughts on those kinds of plans?
Absolutely. I know I work with a handful of people that don't necessarily keep a transaction register as accurate as I do. So they go ahead and round their purchases or whatever they do to the nearest dollar just to make math a little easier for you on the fly. So if that's something that you're comfortable doing, absolutely. That change does add up at the end of the month and the end of the year. So if that's something your financial institution will do for you, that's definitely worth a telephone call or an email to them. And then if it's not something that they do, maybe you can go ahead and round it up in your transaction register anyway. You've already deducted it out of your virtual account that you think you have, and so you can just transfer that money at the end of the month into a savings account.
It's a great tip.
And I think keeping it automatic, if there's any way to do it automatic, that's going to help you reach your goals a lot quicker, because then you don't have to think about it, and the burden of actually going in and physically transferring money or taking money into the bank has then been lifted off your shoulders.
One other thing with, we're talking about making things automatic, and I think that's great when you're talking about savings, and maybe you're talking about maybe auto escalation in your retirement accounts where they're automatically pushed up percentage-wise. That's inertia that you can put to good use. You might want to look at inertia that works against you. So maybe make it a financial goal to review your cell phone plan, or if you're getting satellite TV or cable TV, review your options. Are you paying too much? Maybe the promotional periods have expired, and so you're out of contract, and it's time to hunt for something better or something that better fits your needs. My wife loves sports. I don't really care about sports, but once we move out of that sports season, that college football, et cetera stuff, we kind of change our lineup a little bit. So just definitely take a step back and review something. Make sure that inertia isn't harming you compared to when inertia can help you.
Absolutely. That was a telephone call that I made this morning to a radio provider that I had. Thought maybe, well, I just don't need to listen to the radio that much anymore. We've got radios and music on our telephones these days, and so calling to cancel this morning, they gave me a deal I couldn't refuse to sign up for another year. So.
Absolutely.
It seems like there might be some transactions like that in our very automated world that we might not even remember that we signed up for. That might be, something that is an annual deduction or something for a service online, or something that that you don't even notice that it's coming out. So it's definitely something to keep on top of.
Absolutely.
Are there things that are being shared online, Erik, that you want to bring up in terms of some realistic financial goals?
The discussion on Twitter has really paralleled the conversations that have been happening here in the Hangout. There's a suggestion for putting the change in a jar, and when the jar is full, this was from Meredith Berry, then you deposit that in your savings. Other suggestions related to small things you can cut back on, which have been discussed, like the latte, the expensive lattes, but maybe do it once a week, and suggestion to change that up. So maybe one time you're giving up your latte, another time you're making your own lunch as opposed to eating out. So some real practical approaches that can lead to savings. Some real good advice. Michigan Money Health suggests that we know our personal values and our habits towards money, and that we make changes that are aligned with our values, so that they make them a little easier for us to come to grips with, perhaps. And there was one participant who did share that if she did break her weekly Starbucks habit, she could net a savings of $1,000 a year. And so when you look at it in that aggregate, it seems a lot larger than that little cup of coffee that you're indulging in. So really good practical advice being shared.
All right, thanks, Erik, and thanks to everybody who's contributing on Twitter using the hashtag EXChat. We may already be asking, or we're going to ask our folks on Twitter about the 52-week savings challenge. We're getting towards the end of our time, so I'm just going to ask you, Ricki, to tell people where they can find out more about the 52-week savings challenge if they want to do that as a resolution next year.
As a resolution, the 52-week savings challenge is on the UF Extension website, so it's Walton, WALTON, .ifas, .ufl.edu, so it's the University of Florida's Extension website in Walton County. They can go on and look for that under Family and Consumer Sciences, or they can contact me directly, and I'll make sure they have that information.
Great. And it probably would also work to Google 52-week savings challenge and maybe University of Florida or something.
Absolutely.
Like that. And that was kind of a long URL, but thank you for that. Let's move on to our last question about final year-end financial planning tips. And Andrew, let's start with you. What tips do you have for people as they come to the end of the year?
It hasn't been mentioned yet, but your required minimum distribution has to be taken by the end of the year if that's required of you. So if you hit that age 70 and a half, there's RMDs. Also, if you've inherited an IRA and you're kind of drawing it out over time, you may have to take an RMD as well, except in situations where a spouse is an inherited RMD. Also, just one more thing, the charitable gift of RMD, so giving a charity or RMD, that expired last year, but they're talking about bringing it back for this year, so you might want to pay attention to the news to see if you can just give your required minimum distribution straight to a charity from your IRA and not have to take it on your taxes.
Great. Erica, are there things that you'd like to remind people of in terms of year-end financial planning tips?
Yeah, I mean, I think the biggest thing, and we've said it a little bit already, is really just, try to get organized and really think about if you are going to start a savings challenge, don't make those expectations so high that it's not something that you can not achieve. And I think I saw somebody on Twitter mention, even if you're lower income and you don't feel like you have enough money to be able to do it, even just saving pennies or saving change is okay too. So I think sometimes we think if we're going to do a savings challenge, it has to be so much. And I think, really try to set a goal, whatever that goal might be, try to make it consistent, start to make it a habit. I heard, save automatically, and that's actually America Saves Week's theme this year. So I think that dovetails really nice, and that's a week in February that's really dedicated to thinking about saving and saving automatically. So, really just make those expectations achievable, and you're going to end up better off in the long run.
Ricki, how about you? Any tips that you want to leave people with?
I think just making sure, and maybe this just rings true to me just because of my family situations have changed, is to make sure that you check with your employer about your tax withholdings. So make sure that your paperwork's processed correctly with your HR department. Really getting in contact with that person and making sure that you've got all the necessary documentation and how many dependents you have, or how many dependents, or just your tax deductions altogether. Making sure that you're not ending up with, like Barb said, that huge return at the end of the year, and making sure that you're not dealing with identity theft of the state holding on to your money and waiting to get that back. So contacting your HR department with your employer and making sure that your paperwork's processed appropriately for any changes that may have occurred throughout your year.
And Barb, how about you? Anything that we missed?
Well, just to complement what Ricki's been talking about with HR and employers, I think we have to remember, too, that probably about a third of all workers these days are freelancing and self-employed contractors. So there's a lot of people in America who don't have employers. Mm-hmm. So they're really on their own for everything, making their retirement plan decisions, their health insurance decisions, their tax withholding decisions. So just a reminder to those folks that they have until the 15th of January 2016 to do their final fourth quarter tax estimated, the coupon that they send to the IRS. So for those folks, you really need to have a pretty good idea of your tax situation now so that you can send in the proper amount. That's going to be your last opportunity to kind of do your self-withholding in that fourth quarter payment. So hopefully by now, as the year winds down, you should have a pretty good idea of projects that you've worked on, clients that you've billed, payments that have been made or not made, and then you might have to bug those clients to pay you by the end of the year, get that all in. So that's kind of important for the people who are self-employed and need to manage the process even a little bit more closely.
And Erik, in true 2015 style, since we're talking about the end of the year, let's give the Twitterverse the last word. What's any financial planning tips from the folks on Twitter?
You bet. A couple good, quick pieces of advice: set aside some time every week and just do it, to borrow a popular phrase. And also look forward to this coming year, and with planning that will give you the opportunity to get your ducks lined up, so to speak, and to have a better year. And then finally, since we are in the holiday season, or approaching the holiday season quickly, plan now to pay off the holiday expenses as soon as possible, if you haven't already. So that's from Pam Atkinson. So,
well, I want to thanks Erik, and thanks everybody on Twitter who shared your thoughts using the hashtag EXChat. It was great to have you as part of this conversation. I want to thank our panel as well, Dr. Barb O'Neill from Rutgers University, Dr. Erik Anderson from the University of Idaho, Dr. Erika Tobe from Michigan State University, Ricki Williams from the University of Florida, and Andrew Zumwalt from the University of Missouri. I'm Bob Bertsch. Thanks so much for joining us for this important discussion of year-end financial planning, and we'll hope to talk to you soon.
One more thing, if we may, any of you who are listening who've been on the Twitter chat, if you want to give us an evaluation comments, we'd really appreciate it, and the link is in the Twitter chat. And anyone who does that in the next 15 minutes, and if you give us your Twitter handle, we will enter you into a drawing for some gift cards.
Thanks, Barb, for picking up that important piece of housekeeping that I missed. I appreciate it. All right. Thanks, everybody, and have a great day and a happy 2016.
Thank you.
Thank you.